Hello, child of God. This is CPA Shadrach Adino, an expert on wealth creation and management. I'm also a practicing auditor and a financial management consultant. Above all, I'm a born-again child of God and a pastor. I would want to take this opportunity to welcome you to today's episode. On today's episode, we are going to bring to you 10 investments that make people wealthy. If you are considering and you've been wondering where you can put your money on, please, dear listener, listen to this episode attentively, and probably you might get one or more investment vehicles that you can put your money on. And before I begin mentioning the investment vehicles, I want to explain the meaning of the word to invest. To invest simply means to buy assets with a view to earning returns or profits on your money. In other words, you put your money somewhere and you let your money generate income for you. In fact, even if you don't get involved in the day-to-day running of that investment, the investment will simply generate income for you. And dear listener, now straight away to the 10 investments that make people wealthy. And before we go into that, I ask you kindly, if you are watching this episode today and you've not subscribed, please consider subscribing. And like this video, turn on that notification bell, and please share this video with those in your contacts. Now, welcome to the 10 investments that make people wealthy. Number 1, land. I recommend land because land only appreciates in value. It does not depreciate. And there are certain things that you are able to put on that land. You can plant trees on the land. Once the trees grow and they reach harvesting stage, you will harvest them and get your money. Number 2, you will lease out this land for agricultural activities. Those who lease the land from you will definitely be giving you money. So you will be getting income from land without even doing anything on that land. Number 3, you can also as well do farming on that land. When you do farming on that land, whatever you farm on that land will ultimately generate money for you when harvesting time reaches. Kenya being an agricultural country, you are assured that most likely the farming activities that you undertake on that land will generate income for you. And finally, when you buy a piece of land, you can as well improve it. After improving the piece of land, you subdivide it. And once you've subdivided it into plots, you sell the land. That will guarantee you of getting amount of money more than the amount that you used to spend on buying that land. So, number 1 investment vehicle that I recommend is land. Number 2, I recommend real estates. Real estates I recommend because of the following reason. Now, you can buy an already constructed house and sell at a profit. You'll get more than the amount that you've spent on buying that house. The second item that you can do on real estates is you can construct, and after constructing a suitable house, you can sell those houses, and definitely you will get much more than the amount of money you spent on the construction. Number 3, after constructing, or even if you buy, you can retain that property as your own property, but get rental incomes on a monthly basis or periodically on quarterly basis. Therefore, the second item that I recommend as a good investment for you is real estate. Item number 3, or vehicle number 3, or let me call it investment number 3, is real estate investment trust. Real estate investment trust is a company that is involved in the management or in the ownership of real estates. Now, there are companies that are specialized in managing or ownership of real estate. What you can do is just to buy shares of those companies, and then once you've bought shares of those companies, once they make profits and they declare dividends, you are assured that you're going to be a partaker in those companies' dividends. Investment vehicle number 4 is dividend stocks. Now, what are dividend stocks? Dividend stocks are simply shares of companies that once they have reached one financial year of business, they declare dividends at the end of a financial year. They are companies at the Nairobi Stock Exchange that are known to be generating dividends. They make profits, and once profits have been made, they declare dividends. And because you're a shareholder, you've bought shares of those companies, definitely you're going to be a partaker of those companies' profits in form of dividends. Now, there's a word of caution. Before you embark on buying dividend of any company, or buying shares, of any company, please ensure that you understand the business of that company. Don't just buy shares of any company. Ensure that you buy shares of the company whose business you understand. Otherwise, you may buy shares expecting dividends, but you end up losing because the companies are making losses. Now, I want to give examples of companies at the Nairobi Stock Exchange that have been declaring good dividends of late. Now, company number 1 is Umeme. Umeme, the last time I checked, they declared dividends at the rate of 24.79%. Imagine you've bought shares, and therefore, after 1 year, the company declares dividends, and as in form of a percentage, it amounts to 24.79%. I want to tell you that's a very lucrative company if you get such companies as a shareholder of that company. Company number 2 is Williamson Tea Kenya. The other day time I checked, Williamson Tea Kenya declared dividends with a dividend yield return of 13.33%. The third company which declared dividends, and their dividends were very good in terms of returns, was Standard Chartered Bank Kenya. The last time I checked, the dividend yield was 13.1%. The fourth company that declared good dividends was British American Tobacco, BAT. The last time I checked, BAT declared dividend yield at the rate of 12.36%. The fifth company that I checked was Crown Paints. The last time I checked, Crown Paints declared dividends at the rate of 11.89%. There are many other good companies whose dividends are very lucrative. And I'm saying lucrative dividends because when I compare their dividend yield with the current inflation rate in Kenya, I realize that the dividend yield is far much greater than the inflation rate. At the moment, the Kenyan inflation rate is about 7.66%. And compare with the dividend yield of 24%, 13%, 12%, 11%, those are good dividend stocks that somebody should consider buying. Now, the fifth investment vehicle that I would recommend for somebody is called growth stocks. Apart from dividend stocks, there are also growth stocks. Now, what are growth stocks? Growth stocks are simply shares that you buy at the Nairobi Securities Exchange, and you expect the value of shares to appreciate over time. Now, some people prefer that the value of their shares grow as opposed to them getting dividends. So if you're looking for companies where if you buy their shares, you expect the share value to appreciate over time, those are called growth stocks. In Kenya, we have companies whose shares, the value of their shares are still growing. I will give you just 5 examples of companies in Kenya whose shares values are still growing. Company number 1 is called Olympia Capital Holdings. Olympia Capital Holdings, the last time I checked, as at November 2022, the share value grew by 32%. That means if you bought shares in January and by November, the value of shares had appreciated by 32%. So if you're a shareholder of such a company, just be assured that the share value, your investment has grown in value by 32%. The next company that I checked, whose share value grew over time, was Limuru Tea Company Limited. Limuru Tea Company Limited at the same period had a share value growing at the rate of 31.3%. The next company with growth stocks was NCBA Group PLC. It also had share value growing by 31%. The next company I checked was East African Portland Cement Company Limited. The share value grew by 19.8%. And company number 5, whose share value also grew, was Williamson Tea Kenya Limited. The share value grew by 15.4%. So that was investment vehicle number 5, growth stocks. Stocks whose share value will grow over time. If you buy those shares, say you spent 100 shillings in buying those shares, expect that after a duration of time, the share value will not remain at 100. The share value will grow to a value higher than 100. In my recommendation, I would recommend that when somebody is buying such shares, you need to go for shares that will generate both growth in value and also dividends. If you get shares that are growing in value and also generate dividends, those are very good investment vehicles that somebody should consider. Investment vehicle number 6 are called treasury bills. Now, treasury bills are debt securities with fixed interest rate. They are normally offered on weekly basis through a system called auction system. Treasury bills have maturity dates which differ in terms of, actually they have 3 maturity dates. There are some treasury bills that mature after 91 days. Some treasury bills mature after 182 days. Some others mature after 364 days. Now they have a minimum face value of 100,000 shillings. That means if you want to invest in treasury bills, you must be prepared to part with at least 100,000 Kenya shillings. They have minimum face values of 50,000 shillings, but the minimum investment will be 100,000 Kenya shillings. Now, when somebody wants to invest in treasury bills, somebody will be asking, what is the interest rate of return if I invest? Now, the 91-day have an average interest rate, the last time I checked, was 9.78%. The 182-day treasury bill had a return of 10.285%, and the 364-day treasury bill had a return of 10.777%. Now, why am I recommending treasury bills? Because an investment that has a rate of return which is more than inflation, as far as I'm concerned, that is a very good investment. Even if you invest in it, you are guaranteed that your money will not be eaten up by inflation. But when you get a rate of return which is less than the inflation rate, I tell you, over time you'll be losing your money to inflation. So treasury bills are very good because the minimum, in fact, the 91-day treasury bill gives a rate of return of 9.78, which is at least more than the inflation rate. Now, investment vehicle number 7 is called treasury bonds. When you invest in treasury bonds, these are just debt securities, again with fixed interest rate. Now, they vary in terms of maturity dates. Treasury bonds have maturity dates ranging from 1 year to 30 years. Now, they pay interest rates. Actually, they pay interest on investment after every 6 months. After every 6 months, they pay interest. After every 6 months, they pay interest. Now, the beauty of treasury bonds is that they have a rate of return which is at least greater than that of the treasury bills. The rate of return on these bonds are greater than those of the treasury bills. Actually, to be precise, the last time I checked, they were giving a rate of return of 14.7%. That is much more than even the rate of return of the treasury bills. Now, they have a minimum face value of 50,000 Kenya shillings. So if you're considering another vehicle for investment, you could consider treasury bills and also treasury bonds. The beauty of treasury bills and treasury bonds, they are government securities. And with government securities, you expect the risk to be very low. The probability of the government failing to pay you on your money that you've invested is very minimal. That's why they are mostly recommended for people who are risk averse to invest in such securities. Investment vehicle number 8 are called money market funds. If you're looking for, again, another security or another investment with low risk, you could consider money market funds. Now, money market funds are issued or are run by fund managers licensed by the Capital Markets Authority. You cannot manage money market funds if you don't have a license issued by the Capital Markets Authority. Now, the beauty of money market funds is that you are guaranteed to get a rate of return which is more than the inflation rates. Now, that is a beauty. In other words, when you put your money with the money market funds, when you invest in money market funds, you are assured that that money is going to grow at a rate which is more than the inflation rate. Now, the beauty again of money market funds is that you can withdraw your money. You can recall back your money after a very short duration time. In fact, in less than a month, if you want to use your money, you can easily go back for that money. Another beauty of money market funds is that they put interest on your investment on daily basis. You get interest on daily basis. So every day they calculate and give you interest on your investment. That's another beauty of money market funds. Now, I want to give you a few companies that handle or that manage money market funds, so that if you're looking for companies where you can go to and put your money in form of money market funds, then you can consider the following. Kuza Money Market Fund. The last time I checked, they were giving interest at the rate of 10.1%. The next company is Apollo Money Market Fund. The last time I checked, they were giving interest at the rate of 10%. Then the next one is Zimele Money Market Fund. The last time I checked, they were giving interest at the rate of 9.9%. Another one is NCBA Money Market Fund. The last time I checked, they were giving interest at the rate of 9.8%. Another one is called Sanlam Money Market Fund. The last time I checked, they were giving interest at the rate of 9.6%. The next one is CIC Money Market Fund. The last time I checked, they were giving interest at the rate of 9.2%. And there are many others, including Britam Money Market Fund and many others that I cannot exhaust the list. Now, again, I say the beauty of this money market fund investment is they give a rate of return on your investment at a rate which is higher than the inflation rate. The word of caution that I keep repeating here is, if you want a good investment so that your money is not eaten up in inflation, it should be able to give you a rate of return which is more than the prevailing inflation rate. If you get an interest rate or a rate of return which is lower than the inflation rate, I tell you, over time, your money will become valueless. You'll be losing your money on this investment over time. So that is why I'm very particular on which investment vehicles to recommend for my dear listeners. Now, the next investment vehicle number 9 that I want to recommend for my listeners is Sacco Societies. Sacco Societies is a hidden investment vehicle. It is hidden because many people have not discovered how good Sacco Societies are. But I want to tell you, dear listener, I've done a research on Sacco Societies. There are some Sacco Societies that are well managed. And in fact, when I look at the rate of return on investment with Saccos, I realize that Sacco Society are even more lucrative than money market funds. This is the reason why I'm recommending Sacco Societies. When I checked with a few Sacco Societies, I realized that they have two rates of returns. There is a return that is given on shares. There is a return that is given on deposits. Now, the last time I checked, there were some Saccos that were giving as much as 21% on shares every year. And in addition to that, they were also giving as much as more than 11% on deposits. Now, I will give you examples on Sacco Societies that are well managed and that are giving very good returns on investments. Now, the last time I checked, there was Nyati Sacco. Nyati Sacco was giving 21% as a rate of return on shares. In addition to giving 21% on shares, Nyati Sacco was giving another 11.3% on members' deposit. I would really recommend that. The next Sacco that I checked was Mombasa Port Sacco. Mombasa Port Sacco was giving a rate of return of 20% on members' shares. In addition to that, they were also giving 12.5% on members' deposit. That's a very good Sacco. Another Sacco that I checked was Magadi Sacco. Magadi Sacco, the last time I checked, was giving as much as 20% on members' shares. In addition to that, they were giving 14% on members' deposit. The fourth Sacco that I checked was Tower Sacco. Tower Sacco was giving as much as 20% on members' shares. In addition to that, they were giving 13% on members' deposit. The fifth Sacco that I checked was Mafanikio Sacco. Mafanikio Sacco was giving members' shares 18% on members' shares. In addition to that, they were giving 11% on members' deposits. Dear listener, if you've been following this program, you can now realize that these Sacco are giving much more than the inflation rate. The inflation rate, I've said, currently is about 7.66%. Compare that inflation rate with what these Saccos are giving on members' shares and on members' deposit. Then you will agree with me that Sacco societies are good investment vehicles for your money. Number 10, another good investment vehicle, number 10, for your money is education. If you invest on education, I tell you, you are guaranteed to generate returns on education. Now, what kind of return will you get when you invest on education? I want to assure you, when you invest on your own education, your value is guaranteed to increase. You will have a stronger bargaining power when you're discussing salary with your employer. So you educate yourself, your bargaining power increases because your value also increases. In addition to having a stronger bargaining power with your employer, education is relevant to the current generation of today because we are living at a time when it is written that there will be a knowledge explosion. In other words, people in this generation are in search of knowledge. When you invest in your own education, you are positioning yourself to be a provider of knowledge. And because we are living at a time that people are in search of knowledge, you are bound to get market because people will be coming for you to give them knowledge. People are looking for skills. People are looking for training. If you position yourself by investing in your own education, I tell you, you'll be better placed to be a provider of knowledge. So when you invest in education, that is a good investment that will almost instantly give you return when people come to you in search of knowledge. In summary, dear listener, I've talked of 10 investment vehicles that you should consider putting your money on and where you are guaranteed of good return. Number 1, land. Number 2, real estates. Number 3, real estates investment trust. Number 4, dividend stocks. Number 5, growth stocks. Number 6, treasury bonds. Number 7, treasury bills. Number 8, money market funds. Number 9, Sacco societies. And finally, number 10, education. Dear listener, if you're looking for a place where you can put your money, consider those 10s. And most likely, probability of you getting better returns or lucrative returns are very high because of what I've just explained. Dear listener, I want to stop there and I want to thank you sincerely from the depth of my heart for giving me your ears. We are here to guide you. We are here to help you put your money where you're going to create wealth. Create wealth even as you sleep. Create wealth. Let your money work for you and let your money generate income for you. Dear listener, as I stop, I want to request you once more time. If you've not subscribed, please subscribe to this channel. Please like this video and turn on the notification bell. If you do that, YouTube is going to alert you of our subsequent videos, which you are sure will be many from today. I want to say thank you. Please kindly help me by sharing this video with those in your contacts. May God bless you and may you prosper in Jesus' name. Amen.